Hi fellow traders, I'm sharing my observation and analysis of GBP USD with you. So after this sharp fall last year and the recovery to the upside in last few months including January of this year, now there is a question that whether GBP USD will continue to the downside or it will go to upside and recover even more. But now we have a technical picture here which is looking like a double top, although it has not been completed. But it will be the second question whether or not market will go to the neckline. This is neckline of the double top. So this will be a second question whether or not it will go to the neckline and break the neckline. The first question is whether this pattern will be completed or not. So there are two ways of trading pattern. One is under formation trading and another one is trading after the completion. So everybody knows that if double top will be completed and if the market will break below the neckline, you can take the sell position. I'm talking about under formation, that you can now take the sell position in anticipation of completion of this double top. So you can expect GBP to fall to the neckline at least. And then what happens, whether it breaks the neckline or doesn't break the neckline, that will be the second question. So what we now have to think of completion is this candle pattern. Look, this is looking like a Malbazoo, or at least you can call it a bearish engulfing. If you can consider these three candles together, this one, and this one, these three are making evening star. So evening star and this bearish engulfing, these two are significant candles even in size here. So this is a significant candle pattern on a significant time frame, like weekly time frame. So there are more chances that the market will fall down. However, I didn't take position right after formation of the candle pattern. I mean, I did not enter here. I waited for upward retracement, and then we saw there is this tiny candle which is looking insignificant in comparison with this previous candle or candle pattern. So I was waiting for like upward retracement, get the better price to sell at, and now is the time we have a better price. So if I plot this measurement tool, market retraced up to 61.8% already, and then there is a chance to go to the downside. If it retraces above 61.8%, then I can say that the bears have lost the momentum. So if it is really bearish, then it should continue right from 61.8%. So these are the technical things in my mind which are telling me to go short on GBP USD and target this neckline, and then later I'll think whether this will break the neckline or not. This is the observation on weekly. Now let's go to the daily time frame to see what we have on daily time frame. Number one is we have some sort of bearish divergence. Market didn't make any higher high, but it made a similar high, and this is a slow price action. To understand the slow price action, you can simply look at any oscillator. An oscillator is supposed to make a lower high to confirm that this price action is slow, so you don't need to stress your eye to look at the chart price action. So we have a lower high on RSI here. You can look at the slope of this RSI high formation. This is confirmation of slowing down of the uptrend. So after slowing down and double top formation, today we have something called stop grabber. So if you see this dotted kind of line, this is MACD predictor. If price is trading below MACD, it's a downtrend, and price was trying to break above the MACD predictor. It almost touched MACD predictor, however it couldn't break, and now market is going to close something like a shooting star. This daily candle will become a shooting star if the body will be very small like this, and if it will be bearish. We still have almost 3 hours in closing of this daily candle. So I don't know whether it's going to be a bearish shooting star or this looking like shooting star, I don't know, but certainly it couldn't break the MACD predictor, and this is a confirmation of a poor bullish force. Anyway, if you look at the price action of last 1, 2, 3, 4, 5, 6, 7, 8 days, this price action is damn slow in comparison with these two price actions. So market doesn't have bullish force, and it doesn't mean that market can always move with bigger force, and the market cannot move in one direction if it doesn't have bullish force. It's not like that. For example, last time you can see this was a very slow bullish force, but market kept moving to the upside. So if somebody just took position somewhere here or here in anticipation of fall, then he would lose money because market kept moving to the upside even though it was slow. So there can be a chance that market can keep moving to the upside, and it can be a slow movement without breaking this low or this high. It can move to the sideways, or it can stay between this high and maybe this low. That's why we should look at other factors, and the other factor here is MACD predictor. So what happens when market touches the MACD predictor and it doesn't close above MACD predictor? It makes a stop grabber. So basically, when if there are buyers in the market who are anticipating rise and who are holding into the rise, it says that the market will return to the downside and take their stops, which is generally placed below this low. So market is supposed to come down and hit this low or go at least below this low by a few pips. So if we can take sell position here, we can at least target this point, this price level, even if we don't target the neckline which is here. So this is the observation on daily time frame. Now coming to 4 hour, I have a harmonic pattern on 4 hour. This is a Gartley pattern, and this is very harmonic because if you look at the length of AB and CD, this is equal. This was 225 pips, and this move is also almost 225, 236 pips. So 5-6 pips difference doesn't make it less harmonic. This is harmonic pattern, and now market is supposed to fall down. So this is bearish Gartley, and it should come to the downside like that. However, we have to look at the fundamental factors to figure out whether or not this is going to be continuous into the downtrend, because we have a sustained uptrend of last almost 4 months. It was 21st October or something, similar date of the last year when GBP USD started recovering after this huge fall to the downside. So this has been a sustainable rise of 4 months. So we have some technical picture which are certainly telling that the market had slowed down, but we have to be very careful because we don't know yet that it had recovered enough to resume the fall. So let's look at the fundamental factors of February, because now we have this double top and we have bearish movement in the February. So I looked at all the factors, fundamental economic news coming from the USA and UK to figure out whether my technical analysis or observation is in line with fundamental data. So ever since release of bank rate from the UK this month, GBP USD has been falling. So that was February 2. You can see that February 2. This is. So there was a significant fall after release. Then the condition of GBP USD was aggravated by significantly better NFP, better than forecast. So this was a significant fall. And if we look at other data of the UK, the high influential data, or you can say high impact news, the only positive, or you can say only better than forecast data was the changes in the unemployment claims, which was offset by another negative data which was less than forecast average earning index. So there was no positive overall data from the UK this month, and I'm talking about these monthly data which are released every month. If we look at some other data like today's CPI, so you'll find that the monthly CPI was actually monthly CPI came as expected. It was similar to the forecast consensus. Even yearly, even monthly core CPI came to be exactly as forecast consensus. So there was no difference in the release of monthly CPI or core CPI from the US today. However, there was a positive revision of 0.1%. So it makes it overall better for the US dollar. And the second thing, if you look at the yearly change in the CPI, both core CPI and the core CPI and CPI both came slightly more than expected. So if your calendar doesn't show you the revision of CPI or yearly CPI, you should use a paid data source, because there are many online free calendars. They do not give you the data of revision. If previous release is revised, they will sometimes show you, they will sometimes not show you, because I've received such kind of information today from many of my students and many of my clients that they cannot see any revision in previous CPI, monthly core CPI and CPI in their calendar. However, there is a revision of positive 0.1% in both. So the thing is, I'm deciding today after release of CPI, because we almost have had all the significant news already in this month. First February was the release of federal fund rate. Second was UK interest rate. Then we saw the NFP. We saw the CPI from the US, and there is no other significant factor which can further hinder the progress of GBP USD, hinder the progress of formation of head and shoulder not head and shoulder, double top on this weekly time frame. So there is a CPI tomorrow from UK, which is going to come at 2 a.m. New York time, which is an yearly CPI, year over year CPI. It's not a significant or sensitive data. Monthly CPI or any monthly data is more sensitive for forex trader. However, I compared previous release to figure out whether there was a significant market reaction. Then I found out that there was no reaction. For example, if you go to December 14 last year, forecast consensus for the yearly CPI was 10.9%, and it came 10.7%, and 0.2% deviation didn't cause any significant price reaction in GBP USD. You can go to 2 a.m. New York time, and you can see the hourly candle reaction on December 14. So the point I'm trying to make is that there are two things tomorrow. One is yearly CPI of UK, another one is retail sales from the US. And if I have to take position right now, I have to be aware and cautious of these two data. And I'm downplaying the CPI of GBP USD by saying that it didn't play a significant role in price action in last two releases. And I gave you an example of the release on December 14th. So you can cross check it. Second thing is, I'm anticipating that the retail sales tomorrow is going to come at least in line with the forecast consensus, or slightly better, because if I look at the CPI and NFP, these data are a little correlated, and you can understand why it's correlated. If I explain the correlation, the video will be even lengthier. The point I'm trying to make here is they are correlated, and since we have not weaker CPI, we have slightly positive revision in previous release of CPI, we have better than forecasted year-over-year CPI, and we have significantly better NFP. So all these data are giving me some indication that the retail sales is not going to come weaker. So there's no problem in taking position today. However, I will use a technical filter to make sure that the price continues, and then I'll take the sell position. I mean, price continues downward, and then I take the sell position. And I will split my trade into two positions with half lot size in each, and I will target one for the stop grabber with my TP slightly below this low, and another position with a target of the neckline. So neckline will be here. And the trade filter which I'm going to use is the price action, which I can demonstrate you easily on half an hour time frame. So let's look what happened today. This is the half an hour candle, and this is displaying what happened right after the release of this US CPI in first half an hour. So this was like wave to the both side, then there was downward fall, and there was upward move which totally erased the downward fall, and here price was neutral. Then again market started going down in the next half an hour. So after initial 2 hours there was a downward fall, which could be a conclusive or a directional move, which could tell you that okay, this is the final direction. However, what happened is market didn't continue below this move, which didn't give me confidence to enter sell right after this scan. So I waited, and then I can see that the market again started going to the upside gradually, especially after the close of the London session today. So now I'm waiting for price to at least come to the downside below the low of this candle, and this is where I'm going to enter my sell position. So there are two ways. You can either wait for CPI tomorrow, the YY yearly CPI, year over year CPI or GBP of the UK, and then you can enter, or you can simply put a sell stop below this price level and you can enter. So this is how we are going to trade GBP USD, and we are going to have two different targets, like I said. And let's now talk about the risk management in this trade. So since I'm splitting this into two different trades, I'm going to have two different stop loss as well. Number one, I'm going to put my stop loss above this high. So if this high will be invalidated, if market goes above it, one position will be closed with whatever loss I take. So it will not be a huge loss. If I compare the risk here, then if I am taking position here, my risk will be 127 and the entry will be 2140 roughly. 2140, 127, and the reward. So let's go to find the reward from 2140 to this point. So 189. So my reward is bigger. In another position, my reward will be the neckline. So my reward will be 300 pips, 306 pips, something like that. And then my risk will be something around 300 pips, because I will keep my stop loss above this line. So it will be 302 or 303 pips. So my risk and reward in one position will be equal to each other, and risk and reward in this position, which is going to last for less number of days, will be like this: 127 versus approximately 189 or 190 or 176, something, whatever is the precise number, but the reward is greater. So my reward in both positions are not less than the risk, and this is the total scenario of GBP USD, and I told you how I'm going to trade. So that's all. Thank you for